Jobs, jobs, jobs. That's the focus of the government today, the Federal Reserve as well. They want to make sure you're employed, and that's why it's front and center. But of course, if you look at reality, you see that there's so much more going on. And in fact, I'm going to break it down all for you today. You're going to get each and every piece of this puzzle right here in this video, so stick with me. First thing, we're going to talk about the jobs. We're going to look at what's happening in California right now. This is quite extreme. Is this the beginning of universal basic income? Well, California is one experiment. I'll talk about that. We're going to look at the economy as a whole, of course, inflation and so on, but I want to talk about the new order, which is being formed right now today. A lot to cover. Here we go. Beginning with this, unemployment rate falls to 3.5% in September. Payrolls rise by 263,000. Yes, the market is strong in terms of jobs. So we have to take this apart and understand what happened here. The unemployment rate went to 3.5%. It was at 3.7 prior to that. It was actually around this range as well. So it's been fluctuating, but it is extremely low. We measure this by the U3 unemployment. This is not actual true unemployment. But anyway, this is what the analysts are looking at. And so we have this and have to start to ask the question of, is this actually strong growth, or do we have manipulation of the numbers? I will break that down in our little split screen segment in a few minutes here, but I just want to talk about this and let you know what's happening here. The labor force participation rate also went down. Okay, this is also key because you've got to see it in a holistic view. Unemployment is not one number. It's not the unemployment rate. They're going to show you this number and it's 3.5%. Does that mean that 3.5% of those who are actually, out there within that age group unemployed? No. There's so much more to it. We'll talk about some of that right now. I also have a video. If you type in unemployment fake the money GPS, I do a whole breakdown in why that is the case if you want to check it out. But take a look here. Monthly payrolls. You can see that this has come down month after month to a great degree. Looking at, as a result of all of this, you can see the desperation in the consumer. Their level of employment may not be up to par with the level of inflation. It's going much faster than they can deal with. So what do we have? Total consumer credit has risen considerably, near a record high today. Total revolving credit. This has accelerated to, it's coming close to $1.2 trillion. This would be your credit cards and so on. So of course, people don't use their credit cards unless they have terrible money management or they are in dire straits. And for a lot of people, that's the case today. Now, this is where we get into the next aspect. I want to make this clear. Many people have been saying that the introduction of universal basic income would resolve so many problems. Now, we can look at that and we can break that down in a separate video. One of the points is that there wouldn't be 100 different programs. It would be cash, one program, one way to administer it. The back office situation will be much more simplified. It's one thing. You give everybody a check and that's it. I could completely understand logistically how much easier that would be. However, we saw with the PPP loans what happens when you give money out to people who don't need it. The people who do need it, that's a different story. But when you start to see easy money flowing, you start to run into problems. That's the way it goes. Look, I'm going to show you this. 23 million Californians get inflation relief payments starting Friday. I think it's unusual to give, I gotta say this, I have to talk about this. I was gonna try not to. If you have an inflation problem, you don't add more inflation on top. Okay, let me say that a different way. If there's a fire and you take gasoline and you pour that gasoline on the fire, you're probably going to make that fire larger. Now, I don't know, I'm not a chemist, but I think that's probably going to be the case. You cannot fix the problem by giving out more money, especially to 23 million people. It's just not going to work like that. You're going to give them, $500 there, $1,000 there. It's not going to resolve their, yes, I'm sure they'll take it, they'll be happy, but it's not going to resolve an issue. You understand? Look here. California inflation relief checks will go out later this week. People need cash, not a card, they say. Well, look, you got a problem with inflation and you're about to give a lot of money out there. They came to an agreement worth $17 billion. So they are going to take $17 billion of taxpayer money and they're going to give it to people in order to help them with this burden. Depending on their situation, $75,000. If you got a joint filer, that's $150,000. You're going to get $350 in that case. So you're going to get a few $100s, and I really do not believe that this will have any impact on the lives of people. I really don't. For those who are in very dire straits, I'm sure even $1 would help. But there's something else going on here, and I just see the patterns being repeated over and over again. This doesn't fix the problem, just like the PPP loans didn't get the economy going again. And it is only a matter of time before inflation gets worse as a result. I wanted to talk about the job situation to explain it a little bit more in depth. Companies are looking very carefully at their bottom line right now because they're not borrowing at these super cheap rates. Many have begun layoffs, and you could see that with layoffs tracker. There's other places that you can, but some companies have certainly begun to do this, and that means they're tightening their belts. So anybody could be let go. Always keep in mind that the unemployment rate is not anchored in reality, but it's important for the markets, analysts, and companies. They react according to it. So you and I, we know it's not a real stat. That's a fact. However, you have to know that the markets, the analysts, everything, those are the ones reacting to it. And of course, that does impact things in the real world, despite the fact it's not very real. Jobs numbers are manipulated using many tactics, including seasonal adjustments. So you've seen this, I've shown you before. If you take away the seasonal adjustment, suddenly the numbers look way, way different. Literally, I was looking at that not that long ago, $1.5 million differential. It's just unbelievable, to say the least. These are the factors today related to jobs, and certainly I just want to show you that. And we have to break down the next issue, which is the economy. FedEx ground to lower holiday volume forecasts. Again, they're doing this. You could see they came out not that long ago and they said, well, it's just FedEx. Everything else is fine. Not really. This is the IMF basically giving a warning. And this is from the head of the IMF in a speech. And I'll just quote this one part. Financial stability risks are growing. Rapid and disorderly repricing of assets, you can read that as crashing, could be amplified by pre-existing vulnerabilities, including high sovereign debt, Europe, hello, and concerns over liquidity in key segments of the financial market. So we've seen what happened with Credit Suisse and so on. The Fed is on track for another large interest rate hike after jobs report. So you see that for yourself, right? And I just wanted to make something very clear. This right here, the article out of the Wall Street Journal, written by the mouthpiece, Nick Timiraos, I believe that's how he pronounces it, and essentially saying that they're going to do another one, 75 basis points, and they use him to put this information out there to see how the market reacts to it. And that is very important because that's their forward guidance, as they like to say. This is the big news, and I'll just cover this really quickly. I want to talk about this. Everything leading up to this point right now today is critical to understand how it affects you and I. The economy, you could see it getting real soft. You look at what's happening with inflation. People are destitute, using their credit cards, everything. But now we move into a world, what they call a multipolar world. And I will get into that further. We'll cover that in the split screen, where we talk further about looking at the potential here for a China, Russia, BRICS nation leadership in this multipolar world. Very interesting, to say the least. This is Putin. Okay, this is actually Putin himself saying it. We are actively engaged in reorienting our trade flows and foreign economic contacts towards reliable international partners, primarily the BRICS countries. So this is very important because you look at this and understand what they have been doing, what they've been saying, and realize the two of them, they're actually in line. Usually you get a lot of nonsense from other countries, but they have been really showing us that they mean business. There's no doubt about it. They are being sanctioned, and they say, why am I going to deal with this? We just need to form our own alliances. We're going to do trade more, Russia, China, BRICS nations all together with us, and maybe China won't buy as many soybeans from the United States. Maybe they're just going to go to Brazil instead. They were doing that in 2020 or 2019. So why not continue? China knows what's going on. China is at the head of all of this. They're setting up new organizations and they're making this happen day by day by day. If we ask the question, what do they know? I believe they can see into the future and realize that no empire lasts forever. China's meetings with Middle East ministers sets the scene for Beijing to step up in the region. This week, China will host representatives from the Gulf Cooperation Council, Saudi Arabia, Kuwait, Oman, Bahrain, Iran, and Turkey for talks. While China in the region is the biggest trading partner and energy buyer, relations have gone beyond economic ties. And that is really what it all comes down to. We could see the partnerships here. We could see that they're saying, hey, we're all buddies here. We're all friends. Let's work together. And those other guys, not so much. That is huge, to say the least. If we start to see major changes the way that they are unfolding, this is going to be a very big problem for the strength of the US dollar being the reserve currency of the world, slowly declining each and every year, right now at 59% of total reserves, still large, but things have really been changing. Like I said, every empire comes to an end. We see lines divided in between the West and China's alliance, the BRICS nations, and so on. But we can see that things have really changed over the last few years. The US dollar is by far the most important currency, but nearly every day there are changes to that. I watch this, I bring you some of that information, and you see how considerably things have really unfolded over the last few years. Following the next crisis, so whatever, if that's right now or maybe a crisis into the future, we can see that there will be a different balance of power. It is, in fact, very clear. You know that. You can see it for yourself time and time again, but as far as I'm concerned, this has been one to watch out for. The one point that I wanted to make was simply that when we look at your investments, when we address all that, you've got to have a diversified portfolio and a geographically diversified portfolio. Your assets need to be spread around, and even within that asset class, you need to be diversifying. It's so important because every market is different. Things change day by day, and that's one of the important factors here that everybody needs to discuss, okay? Because we're not going to be able to handle the stresses of all these changes that are coming up if we're just playing by the same old rule book. I hope you appreciate this message. If you did, you got to subscribe down there. Tomorrow, I will bring you the best and the latest. See you then.